Welcome, crypto fam. In today's show, there is a lot to cover, including Bitcoin seller exhaustion hitting a 4-year low and typical bear market move. I'll be breaking down the latest technical analysis and quoting Max Kaiser. China holds more Bitcoin than MicroStrategy. Crypto Quant CEO on Wednesday revealed the little-known fact that the Chinese government appears to hold more Bitcoin than MicroStrategy after it seized 194,775 BTC from the Plus token scam in 2019 to the National Treasury. And this just in, breaking news: inflation hits a whopping 85% in Turkey, which is a new 24-year high. And more breaking news just in: $9.9 trillion asset manager giant Fidelity launches commission-free crypto trading for retail investors. Let's frickin' go. Also in today's show, MATIC price eyes a 200% gain on Polygon adoption by Instagram and JP Morgan. That's right, Polygon's list of high-profile partners is getting longer and longer, including Disney, Starbucks, and Robinhood, which are already boarding on its blockchain. Also in today's show, MoneyGram to enable U.S. customers to trade and store Bitcoin and Ethereum. Bring it. Also in today's show, I'm going to be sharing with you a historically accurate signal which suggests macro Bitcoin shift has already arrived. According to Trader, who called the May 2021 Bitcoin collapse, we're talking about Dave the Wave. Also in today's show, can Bitcoin be worth $1.25 million? Well, in Zac Efron'S new movie entitled Gold, it is, and it's an actual reality. That's right. His latest movie entitled Gold, released earlier this year, shows a scene from the future where Bitcoin is trading at a price of $1.25 million per coin. We'll also be taking a look at the overall crypto market. All this plus so much more in today's show. And I want to kick off today's show by giving a shout out to our sponsor, I Trust Capital, which is the leading crypto IRA platform in the world. You can buy, sell, and trade crypto as well as precious metals 24/7 and in a tax-advantaged IRA, and transfer your existing IRA or start a new one. And they also offer staking and a lot of benefits, so take advantage of it if you don't already have set up an I Trust Capital account. Use my referral link in the description right down below. And as a bonus, you're going to receive a $100 funding reward, truly making this a no-brainer. And with that being shared, welcome everyone to today's episode of Crypto News Alerts, podcast episode number 1093. I'm your host, JV, and naturally, we have a lot to cover. So let's dive right in and look at today's crypto market watch, starting with Coin360. As you can see, the overall crypto market, Bitcoin down 0.77% for the day, trading just above 20,300 at the time of this live stream. We've got ETH down 1%, trading at $1,547. You can see Polygon MATIC surging, one of the top gainers in the top cryptos for the day, up almost 12%, trading just under 96 cents, almost hit that $1 target. We got Binance Coin also pumping and in the green, along with Polkadot, Avalanche, and ICP, while XRP, Solana, and Cardano and Tron are all pulling back and in the red. And checking out CoinMarketCap, holy moly, we're at literally $1 trillion on the mark, as the market cap has been going volatile back and forth. We got 107 billion in volume in the past 24 hours, and the Bitcoin dominance back on the decline at 38.6%, with the Ether dominance also on the decline at 18.8%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we can see Arweave leading the pack, up almost 50%, trading just under $15, followed by Phantom up 18%, trading just under 27 cents, followed by Flow up 15%, trading at $1.83, followed by Filecoin, Polygon / MATIC, and the graph. And checking out the top 100 cryptocurrency gainers for the past week, you can see Dogecoin leading the pack, pun intended, up about 70% for the week, thanks to Elon's Twitter takeover, right? We also have AR up 40%, Mina up 19.9%, Chili's up 21.2%, and OKB up 30.8%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 30 in fear, the same as yesterday. Last week was a 32 in fear, and last month a 20 in extreme fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. Welcome everyone just tuning in. What is poppin'? Holla at your boy in the live chat. As you can see, a lot going on in the markets as we witnessed a pullback after the FOMC meeting just yesterday. But nonetheless, let's dive right into today's Bitcoin technical analysis. Without any further ado, Bitcoin sellers may have not capitulated enough, but current trends are typical of the end of bear markets. According to data from on-chain analytics firm Glassnode, seller behavior suggests that a macro price bottom is forming. That's right. In the latest hint that Bitcoin's latest bear market is nearing its end, Glassnode revealed that the network is currently weathering a perfect storm of low volatility and high on-chain losses. The seller exhaustion constant, calculated from 1 month rolling volatility and on-chain transaction profitability, is thus at a long-term low of its own. And as Twitter post explains, such lows are rare, having only appeared 7 times before, and 6 of those times upside volatility resulted, implying that Bitcoin can soon put an end to its bearish trend. Let's go. Quoting Glassnode here, the Bitcoin seller exhaustion constant has recorded the lowest value since November of 2018. Now, in a subsequent discussion led by on-chain analyst Checkmate, he described the data as typical for bear markets, adding that such levels occur near the lows. Now, the seller exhaustion constant was originally created by ARK Invest and David Puel, who's responsible for the popular Puel multiple indicator. The seller exhaustion constant shown below is the percentage of Bitcoin total circulating supply and profit multiplied by its volatility over the last 30 days. According to ARK Invest analyst Yassine, who explained in this article and also shared, this metric measures whether the two factors align. Specifically, the combination of low volatility and high losses is associated with capitulation, complacency, and bottoming out of the Bitcoin price. So there you have it, an additional data on the unspent transaction outputs, which are the UTXOs, nonetheless shows that the current levels of Bitcoin moved on chain at a loss do not match historical bear market bottoms as indicated here in this chart. And as of October 29th, the latest date for which statistics are available, 75% of UTXOs were in profit, a stark contrast to late 2018 when the tally dipped well below 50%. So there you have it. How many of you are currently bullish on the King crypto for the end of this year to finish out November and December, and then we're into 2023? Let me know in the comments right down below. And quoting Glassnode here, the Bitcoin seller exhaustion constant has recorded the lowest value since November of 2018. This metric reaches such levels when volatility is low, but losses realized on-chain are high. 6 of 7 similar levels in the past preceded volatility to the upside. So there you have it. And I love this quote by Max Kaiser because he makes a great point. China holds more Bitcoin than MicroStrategy. As we all know, MicroStrategy was the first publicly traded company to put Bitcoin on its balance sheet, which created a storm of people adopting Bitcoin, including Twitter, and I shouldn't say Twitter, but Elon Musk, who is now the owner of Twitter, right? He put Bitcoin on Tesla's balance sheet, and we had a lot of other big institutions do the same thing, all thanks to MicroStrategy. And now making a great point that MicroStrategy has less Bitcoin than the Chinese government, considering the Chinese government seized 194,775 BTC. So the Chinese government is a big holder of the King crypto. I think it's very important to point that out, as well as breaking news. Inflation around the world is running rampant. Could you imagine 85% inflation on the United States dollar? That can become a reality because it's happening in other countries around the world. What makes you think that the United States is so bulletproof? I mean, this is a 20-year or 24-year high on inflation in Turkey, which is just wild. And before I dive right into our next story of the day and we discuss this $9.9 trillion asset manager giant Fidelity launching commission-free crypto trading for retail investors, first I want to welcome everyone just tuning in to today's episode of Crypto News Alerts. If you're not already subscribed to the channel, fam, you know what to do. The biggest compliment you can do to show your support is make sure you're subscribed, hit that bell to turn on all notifications. And if you're only listening to the podcast, don't forget to join us over at YouTube, as this is first and foremost a video show. If you want the full thing of what's going on here, the full experience, right? And with that being shared, let's dive right into our next story of the day and discuss this massive asset manager adopting the King crypto, which is breaking news that just came in this morning. Fidelity Investments is launching a commission-free crypto trading product for retail investors. That's the keyword right here, commission-free, meaning you can buy and maybe sell or trade crypto without any fees whatsoever. That's pretty sweet. The firm is one of the largest brokerages in the world, handling almost $10 trillion in assets under management, opened an early access waitlist to users on Thursday morning. The service is called Fidelity Crypto, which will allow investors to buy and sell Bitcoin as well as Ethereum, and others to use custodial and trading services provided by its subsidiary, Fidelity Digital Assets. Users will be required to maintain $1 account minimum. Not too shabby. Seems like the average retail investor can handle $1. Quoting them here, where our customers invest matters more than ever, Fidelity said in a statement shared with CNBC. A meaningful portion of Fidelity customers are already interested in and own crypto. We are providing them with tools to support their choice so they can benefit from Fidelity's education, research, and technology. And while trades with Fidelity Crypto will be free of commission fees, the firm says it will factor in a 1% spread into every trade execution price. So there you have it. The fee is a 1% spread. Fidelity follows Robinhood and Binance.us in offering commission-free crypto trading. I love the game theory surrounding this. If others are offering commission-free crypto trading, in order for other people to compete, they have to offer the same. So this is definitely a good sign. The reveal comes at a time when investors are questioning the ability of Coinbase as well as other exchanges like it to generate revenue. Historically, they have leaned on trading fees for revenue, but fee trading in crypto has become an increasing inevitability. So there you have it. How many of you are pretty stoked up that the biggest asset managers in the world are adopting the King crypto, such as Bitcoin and the #1 leading smart contract platform, Ethereum? I think this is great for mass adoption around the world. Let me know if you would ever invest in crypto using these big asset managers, and how many of you already have some sort of your income tied to Fidelity or potentially BlackRock, etc. Maybe your 401k or whatever it may be. Let me know in the comments right down below. With that being shared, next I want to dive into our next breaking story and do some technical analysis on MATIC. MATIC is a layer 2 scaling solution for Ethereum, which has been receiving a lot of big partnerships like from Disney, JP Morgan just started using them, and this has been making the MATIC price absolutely pump. And I know I shared in a recent episode that a price target of $1 was very realistic, and lo and behold, we're approaching that dollar mark as it's getting very close. And let me know in the comments below how many of you are currently bullish on Polygon/MATIC. Now, Polygon emerged as the best performing asset amongst the top ranking cryptos this morning as the market's attention turned to the latest Instagram and JP Morgan announcements. Notably, Meta, the parent company of Instagram, named Polygon as its initial partner for its upcoming NFT tools that allows users to mint, showcase, and sell their digital collectibles on and off the social media platform. So shout out to Zuckerberg for this recent pump for MATIC. Meanwhile, banking giant JP Morgan used Polygon to conduct its first live trade worth about $71,000, which is now official on the blockchain, marking a concrete step towards integrating cryptos into traditional financial frameworks. Now, MATIC is a utility and staking token with the Polygon blockchain ecosystem, which rose over 13% to about 99 cents after the announcements, accompanied by an uptick in daily trading volume, which you can see here on the MATIC daily price chart. Now, MATIC's upside price movement came as a part of the broader recovery rally across the crypto sector that started in mid-June. MATIC's price has rebounded by more than 200%. Like, whoa, a trend that will likely sustain in the coming months. Now, the first cue for MATIC's bullish continuation comes from a classic technical setup. Here we have it. On the daily chart, MATIC has painted a cup and handle setup, which comprises a U-shaped recovery, following by a downward drifting channel. The token is now eyeing a decisive breakout above the pattern's neckline range, which you can see in this chart, which is the red bar in the chart, to reach $2.89, which is its primary upside target. How many of you are bullish on Polygon and feel that a $2.89 target is realistic here in the near future? Let me know in the comments right down below. And as a rule of technical analysis, a cup and handle pattern target is measured after adding the distance between the cup's bottom and neckline to potential breakout point. And as a result, MATIC is now eyeing a 200% price rally by the end of Q1 2023. So there's the time frame on that suggested price target of $2.89 Q1 of next year. Now, fundamentally, MATIC's demand can keep growing given Polygon's growing NFT projects launched by mainstream companies. For instance, Polygon's list of prominent NFT partners includes names such as Disney, Robinhood, and Starbucks. Starbucks, kind of funny. Furthermore, Polygon had a strong Q3 wherein its numbers of active wallets reached a record high of 6 million, and primarily driven by the launch of Reddit's NFT marketplace on its blockchain. And on the other hand, macro risks continue to threaten the ongoing crypto market recovery, which we all know, which may hurt Polygon despite its growing partnerships with big name brands. That being said, a strong pullback from the cup and handle pattern neckline range could invalidate a bullish setup altogether. So there you have it. Let me know how many of you are currently holding Polygon/MATIC, and do you think a $2.89 is a realistic target for MATIC in basically Q1 of next year? Holla at your boy and let me know in the live chat. With that being shared, we're going to move on to our next story of the day. More mass adoption by the mainstream, but this time in the form of MoneyGram. So let's break down our next story of the day, shall we? Money transfer services giant MoneyGram will now allow customers to trade and hold some major cryptos using the company's mobile app. Let's freaking go. The move marks an expansion to MoneyGram's native crypto support, as it previously enabled users to buy and withdraw Bitcoin in the US. According to a press release released on November 1st, MoneyGram introduced a new feature that will allow customers to buy, sell, and store Bitcoin, Ether, and Litecoin. The company plans to add more crypto assets to its platform in 2023. So as of now, the first three cryptos, again, Bitcoin, Ethereum, and Litecoin. The latest development was possible through a partnership with crypto exchange CoinMe. The ability to trade and hold crypto is available to MoneyGram customers in almost all U.S. states and the District of Columbia. That's what's up. How many of you have ever used MoneyGram as of recent? And if you had to use it, wouldn't you prefer to use crypto versus the outdated ways where they're going to charge you roughly 20%? Now, today's announcement also expands MoneyGram's previous Bitcoin support for customers. In May of 2021, the company enabled customers to buy and withdraw Bitcoin in several of its physical outlets across the states. In a statement from MoneyGram CEO and chairman Alex Holmes shared the following: as a next step in the evolution of MoneyGram, we are thrilled to provide our customers with access to a trusted and easy-to-use platform to securely buy, sell, hold, select cryptocurrencies. Now, Holmes also stated that the company continues to meet customers' demands for crypto while also connecting blockchain with traditional financial services. And the money transfer giant previously partnered with the likes of Ripple as well as Stellar Lumens, and MoneyGram ditched its collaboration with its former after the U.S. Securities and Exchange Commission filed a lawsuit against it, referring to the SEC versus XRP, which is an ongoing lawsuit which started at the end of 2020 and is still ongoing. And because of that, there has been a mass suppression in the XRP price, and the XRP army is now rising up with hopes that and expectations that this lawsuit with the SEC will end fruitfully, hopefully before the end of the year, which can potentially send XRP to a new all-time high. But with that being shared, again, welcome everyone just tuning in to today's episode of Crypto News Alerts. I am your host, JV, and I'm going to continue diving into our next story of the day, and let's discuss this macro shift, shall we? Popular crypto analyst who called the May 2021 Bitcoin collapse says that historically, there's a reliable indicator flashing bullish for the digital asset. Synonymous analyst Dave the Wave tells his 129,000 Twitter followers that the moving average convergence divergence indicator, known as the MACD, suggests Bitcoin is coming out of the months-long bear market, quoting the analyst here. And there you have it, ladies and gentlemen. Momentum and momentous shift on the monthly MACD. No guarantee of certainty, but certainly a strong indicator of the Bitcoin macro turnaround given the previous historical trend, which you can see as he outlines in this chart. Now, the MACD is a trend-based momentum indicator that depicts the relationship between two moving averages of an asset and is used by traders to pinpoint reversals. And at this time, as you can see on your screen, the Bitcoin price is currently hovering just above $20,260 at the time of this recording. And Dave the Wave points out that the logarithmic growth curve to indicate a price base has formed or is forming for Bitcoin in the 20,600 price range. And he says that this logarithmic growth curve is proven a reliable predictor since 2018, as he shares here. Momentum on the shorter term weekly chart, also supportive of the monthly chart. Factor in the LGC model, the curves of which have been on target since 2018, and you've got a reasonable argument for a base forming / form. And the analyst also says that the buzz about Bitcoin is not at the level during the last bull market, but that makes it the right time to invest. As he shares here, remember the hype from the contrarian perspective. Now is the time to buy when the hype is flat. And if Bitcoin bounces to the next arc in the growth chart, Dave the Wave outlines Bitcoin reaching $38,000 per coin in August of next year. What are your thoughts surrounding this prediction? Do you think 38,000 can likely come way before August, as August is almost a year away? It's literally what, like 11 or 10 months from now? But I'd love to know your honest thoughts in the comments right down below. And where do you feel will likely close out this year of Wait, I'm sorry, I forgot. I thought I was showing this chart the whole time and I realized it wasn't up. This is the chart right here, which shows you Bitcoin going to 38,000 in August of next year. Do you feel that this is realistic? Do you feel this is pessimistic? But where do you feel the Bitcoin price will likely be by this time in August or around this time next year? Holla at your boy. Keep it in mind that the Bitcoin halving takes place in 2024 and the market goes absolutely parabolic leading up to that halving. So I'd love to know your thoughts. With that being shared, now let's dive right into our next story of the day, which is the moment you have all been waiting for, and discuss this $1.25 million Bitcoin price prediction, which was shared in Hollywood in this new movie called Gold. How many of you actually watched the movie? I have not watched it yet. I just watched the scene with the Bitcoin prediction, but I'm definitely going to be sure to check it out. So without further ado, let's dive right in, shall we? So here we go. Bitcoin worth $1.25 million in Zac Efron'S new movie, but will it become reality? That's the million-dollar question, right? Zac Efron'S latest movie Gold, released earlier this year, shows a scene from the future where Bitcoin is trading at a price of $1.25 million per BTC. It seems that the entertainment industry is quite captivated by the Bitcoin story and bullish for its future. And of course, no one knows the future. However, the fact that the filmmakers have started talking about Bitcoin shows how widespread the Bitcoin craze is. And this is the scene right here, which was shared on crypto Twitter, quoting the movie. Bitcoin is trading at $1.25 million as shared on the radio in this car scene in this movie, Gold. Pretty interesting. I'd love to know by what year this takes place. I did not watch the movie, so I don't know what year we can expect the 1.25 million prediction, but that's why I'm interested in watching the movie so I can find out firsthand. That's why. So anyways, it's always difficult to task to where the Bitcoin price could be heading next, but let's have a look at on-chain data and understand what's currently happening. As per the latest Glassnode report, the active address growth for Bitcoin has stagnated. The total number of Bitcoin transactions on the blockchain has dropped, which could play a spoil sport in the Bitcoin price expansion, which you can see in this chart, brought to you by Glassnode Analytics. The total number of non-zero Bitcoin addresses has also been on a decline, and the last time this happened was back in November of 2018, which was followed by a Bitcoin price correction. Now, check out this chart. It shows you the Bitcoin balance in miner wallets. And you can see, as Glassnode points out, there has been a 10x increase since October of 2019. And it is very sad news that the world's largest Bitcoin miner, Core Scientific, is planning to file for bankruptcy by the end of the year as it runs out of cash. And it's filing with the SEC on Thursday. The Bitcoin mining giant said that they are finding it increasingly difficult to continue their operations. And as per reports, Core Scientific won't be able to make pending payments due to in October and in early November of 2022, which is what, this month. The company is exploring alternatives to raising fresh capital, hiring strategic advisors, and restructuring its existing capital structure. As Charles Edwards of Capriole Investment shares here, the world's biggest Bitcoin miner is going bust. This is what happens when Bitcoin trades below its production costs for too long. So there you have it. And Bitcoin exchange outflows. Meanwhile, as the bear market continues, Bitcoin whales have been taking this opportunity to fill their bags. And I always like to say, don't listen to what they say, but watch what they do. As the smart money, aka whales, are currently accumulating the king crypto, the net Bitcoin outflows from crypto exchanges has spiked in recent weeks, as pointed out here by Into the Block. Bitcoin just recorded its largest net outflow from exchanges in 6 months. Over 70,000 BTC, worth over $1.5 billion, left the exchanges on October 26th. So there you have it. What are your thoughts surrounding Hollywood's 1.25 million Bitcoin prediction? And when do you feel this price will likely become a reality and a realistic target for the King Crypto? Let me know your thoughts in the comments right down below. Here's my 2 Satoshis. I honestly feel we can reach a $1 million Bitcoin price by around 2028 to 2029, which is 2 halvings away, as the market tends to go parabolic the year following the halving. Stock the Flow model is predicting a $100,000 Bitcoin price between 2024 and 2025. Then I think by the time of the next halving, things are going to get very interesting considering the hyperinflation taking place across fiat currencies all around the world. I think fiat currencies are going to continue crashing into the US dollar, the biggest Ponzi scheme fiat currency of them all. And then eventually the US dollar is going to crash. The feds are going to roll out their CBDCs, central bank digital currencies, and Bitcoin is the antidote to all of that. So if you want self-sovereignty and freedom for the future, start adopting Bitcoin and start stacking sats today.